Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's on January 20th, and on such a short week here, came pretty quickly here. Hey, a couple economic news releases today. We'll start off with the Consumer Price Index, or the CPI, for the month of December. So basically, we had zero in November, and the forecast was supposed to remain there, and actually dipped. And a lot of that, of course, is attributed to the food and energy drops in there. So we've had a pretty big drop in gasoline price over the course of the year, and so we have a negative pullback. But when you strip out the food and energy, it actually went up a little bit. So we had November went up 0.2%. It was supposed to go up in at 0.1, and it came in at forecast. So for over the 12-month period, average, it went up about 2.1%. But primarily, if you look at the Fed, kind of looks at for inflation. The Fed does want inflation at 2%, but they won't look at the PCE, or the personal consumption expenditure, which is their favorite gauge, which is reflecting about 1.3 year over year appreciation level. So a little bit of a difference between the two here. Last but not least, we got the housing starts for the month of December. We had a 1.18 million at pace back in November, and it was supposed to jump up to 1.23, and it looks like they kind of pulled off in the month of December at 1.15. So we'll probably start the year off pretty good, because we did have kind of a spike in the permits. So a lot of those probably got held off on December, and probably will start off the year with more of those permits and stuff. Right now, the stock market's down quite a bit. The Dow is actually down almost as much as 400. Did actually touch over 400. It's been kind of going back and forth, but right now it's in the high threes. A lot of it, of course, another drop in the oil prices, dropped down to about $27 a barrel. Also, more concerns about Chinese growth. The big thing about China is it's not as bad as people make it to be. We've been kind of lumping it in this developing nation / manufacturing, and their manufacturing is slowing down, but as they become more mature in their economy, like the U.S. and Japan and Europe, they're going more towards a service oriented. And if you look at their GDP numbers, that part is growing. So they are growing their services industry, and they're kind of migrating into more of a service oriented country. So you're going to have these type of things. But as a result, in the meantime, if you read the papers, everything looks like everything's falling apart in China, but it's not quite as bad as the media kind of blows out here. So be cautious on the reports you read on China as they become more of a service-oriented country here. Also, we got the bond market. Bond market's looking pretty good here. We're currently at about 31 basis points, so that translates to much better pricing compared to where we were yesterday. So as you can see, it jumped up quite a bit, and so far we've been hovering this week above the 200-day moving average, which is a good sign for us, as that becomes a floor of support for us. All right, folks, you guys have a wonderful day. Thanks so much for watching. We'll catch you guys tomorrow. Bye-bye.